And welcome back to the Lance Roberts Show podcast. We're talking to Bill Fleckenstein today from Fleckenstein Capital. So, Bill, just for the break, we kind of left off talking about moving to 2019. There's a real opportunity here that we're going to see a much weaker economic environment, could see a variety of issues going on. You're a famous contrarian. I mean, you've built a legacy around kind of a lot of your contrarian views. So for people moving into next year that are trying to figure out what to do with their money, what do you think?
Well, I mean, that's kind of a broad brush. I mean, I think I've told you what I expect will happen. I mean, I don't know why anyone would want to own common stocks generically, given what's going on now. I mean, there's lots and lots of businesses out there, so there may be some things that that are cheap and are doing well, and things I have no understanding of. I get all that, but I think people need to be prepared for a really ugly stock market now. When things get ugly enough and we get QE, then they're going to have to make another whole decision about how that's all going to play out and how to be set up. I myself, I'm bullish on gold and gold mining stocks, but they haven't exactly done very well for quite some time. And despite how cheap and how well some of them are doing, mostly what they do is go down every day.
Yeah, and it's frustrating because again, you look for an area that could be a defensive play for your money, and then yet it doesn't seem to work in the near term.
I don't think you can think about gold as being defensive. I mean, because the personality of gold is volatility,
sure,
and it's a macro, so it's hard to get your arms around the variables that are going to move at any moment in time. So I think of it as more of an offensive position. I think you have to have that mentality because it just the nature of it. I mean,
right.
It will do well in periods when other things don't, because of the fact that it is an expression of a lack of confidence in the policies that the Fed and the other central banks have pursued. And in those periods where those policies are exposed for being ineffective and really that they don't work, then gold has a chance to do better. So it's really I'm making this point because I think
right.
people need to understand why it does what it does, not just some people always use the risk on, risk off, which I think that does more harm than good because it doesn't really tell you anything.
Right. Well, so do you like the gold miners over the actual physical commodity of gold? Do you like both? What do you think?
I think gold is going to be in a period where it's going to have a chance to go up a lot after having no real fans for quite some time. And despite the universal hatred of mining as an industry because it's of lack of performance from an investor standpoint,
right.
Many of the companies are really well run and have done a lot of good work in terms of getting their costs down in the last group of years, and some of them are finding gold. So I could show you a group of stocks or a handful of stocks that at $1,250, $1,300 gold, are selling it between 8 and 12 times earnings and have growth potential and long live reserves. I mean, it's like they got valuations like stocks did in the 80s, which is something I haven't seen for a long time.
Right.
But all they do is go down every day, right?
Sure.
Okay. But I think with a mindset change, if you get people to come back and examine them, they'll say, wow, these are cheaper and doing better than I thought, because I think everyone says, oh yeah, they're all big piles of crap and they're all poorly run, and that's just not true.
Right.
Not all. There are plenty of companies that have assets in bad places or managed badly, but there's a couple of large handfuls of ones that are doing quite well.
Well, I think to your point, Bill, this has a lot to do with the overall psychology of the market that the Federal Reserve has created over the last, 5-10 years with, massive rounds of quantitative easing. Why would you want to be in anything other than Apple, Microsoft, Intel, Facebook? Because that's where the money is. That's where the market's going. Why would I buy something like a gold miner? Valuations aside, nobody seems to pay much attention to valuations anymore. And if you do talk about Shiller's valuations or cave value or whatever, you're called an idiot.
Yeah, no. I don't think I don't think valuation has been a very serious driver of stock prices. As I said, that out of the top 10 drivers for stock prices, the first 9 were QE.
Right.
The 10th was momentum, and I think humans have gravitated towards it. I think all the algos chase it in one way, shape, or another. So you've had an epic momentum chasing fest on the back of all this free money, and that's why some of these high-flying stocks unwound as fast as they did on the way down. Basically, they didn't even, the old expression, they went off the cliff and didn't even leave any skid marks. You know what I mean?
Right. But so it's interesting because we've seen that environment, and we've also seen a lot of chase of companies that have no fundamentals whatsoever. I mean, we can talk about some of the marijuana companies. You can talk about Tesla. You can talk about a lot of these, and those seem to be some of the poster childs that I remember Enron back in 1999, 2000. You were around then. We can go through the WorldCom, Global Crossing. Those whole companies. A lot of what's going on today currently reminds me a whole lot of what we saw in late 1999.
You mean from a credit standpoint? Or?
Well, no, from a credit standpoint, psychology standpoint. I mean, look, Tesla comes out, a few months ago, talks about they've got a buyout at 420. There's an SEC investigation. He gets kicked off the board of directors, and the stock's back to where it was before the announcement.
Tesla is a unique brand of insanity because it's really kind of unanalyzable because of all this cross currents and this crazy stuff that Musk does. So in every cycle, there's always a few things that are, some are really. I remember vividly in the last cycle, one of the stocks I did battle with forever was Research in Motion, and it took forever to get people to realize what how poorly they were set up and all of that. And Tesla's just been one of the, it's been the poster boy really for this particular environment because. By my reckoning, I don't think it should be where it is, in terms of stock prices and all that. And but I have not tried to tangle with it because it's one of every now and then you come across something that's just too tricky or too difficult for the environment, and you just say, I'm not going to mess with it. So I really haven't. I maybe traded it a couple of times, but I used to say that Apple and Tesla were the poster boys because basically Apple doubled starting from the moment in time when their phones stopped selling as well as they had, and their market share started declining. And in the 2 years where their market share went from say 23 to 12, stock price rose from say $90 approximately to 228. So I used to say these are the two poster boys, and until they crack, market can't go down. Well, they finally cracked Apple, and because it's more analyzable, and Tesla. My guess is on Tesla. We'll walk in some week down the road, and the thing will just be down a ton and start to unwind for some reason. I don't know what it will be. I think the chances of him pulling this off are almost impossible. But again, it's not something I don't have an axe to grind. I don't have a dog in the hunt. It's just too hard.
So one last thing here. I just want to kind of get your take on, talk about this environment we're in where there's a lot of the speculative chase, et cetera, Bitcoin and all the ancillary, opportunities around Bitcoin. That was one of the big momentum chases, last year, really even early this year. That's completely fallen apart. Do you think we've seen the end of Bitcoin, or is there something else here to be seen yet?
No, I think the cryptocurrency craze, exhausted itself last year about a week before Christmas, and the unwinding this year has been the unwinding. I think it's going to continue to unwind. You can't try to tell people that you buy these things because there's a limited quantity when there's an unlimited number of forks they can do, and other cryptos can be produced in unlimited quantities. Mm-hmm. In the space of time when Bitcoin rallied from less than 2,000 to 18,000, the number of cryptocurrencies increased from like about 800 to 2,000. So there's an infinite supply of this crap. I don't see how it could ever really be worth anything. Now, might one of them make it as a form of getting means out of a country? Sure. What I think is interesting is that despite all of the talk about how wonderful the blockchain was going to be and revolutionize, so many different industries, so far there's not one real application of it. I think that's a little more shock. The fact that the only thing that shocked me about the cryptocurrencies was how high they went.
Right.
The fact that they've collapsed doesn't surprise me at all, because I think they're all effectively not or worthless. But I've been really kind of surprised that there's been no real applications for the blockchain. So what will be interesting to see is if people come up with them, or if the whole thing turns out to be a giant bag of hot air.
That's interesting. Bill Fleckenstein, Fleckenstein Capital. Listen, really appreciate your time today. It was great talking to you. I'd love to have you back on the show sometime, particularly after we get to next year and it's time to start to see this unraveling occur. Love to have you back on to talk about, what's happening and where we're headed to next, and just to validate what we've been talking about.
All right, let's do it.
Thanks. Bill Fleckenstein, Fleckenstein Capital. You can go by his website, fleckensteincapital.com, and of course, log in there and of course get subscribed to his website. And of course, that's where you can ask Fleck, which is where you have the opportunity to ask Bill any question you want. So again, get by Fleckenstein Capital and make sure and tune into our website and our podcast, realinvestmentadvice.com. You can get all of our podcasts along with this one from Bill on our website under our podcast tab, or at our YouTube channel, thelancerobertsshow.com. And we'll see you next time.
Want a longer talk with Lance about your money? Request a personal one-on-one at realinvestmentadvice.com.